James, hello, how are you?
I'm fine, thanks, Leo. How are you?
Yeah, I'm very well, thank you, James. Been enjoying some sunshine.
At last.
Absolutely. James, how have things been over the last month with the markets?
Well, it's been another positive month for most global equity markets as the global economic recovery from the pandemic continues. Restrictions were further eased in the UK, with hospitality venues allowed to open indoors, and the latest figures from the ONS showed that retail sales grew 9.2% in April. So the FTSE 100 index has increased a further 1.1% in the last month, and smaller companies, measured by the FTSE Small Cap Index, have enjoyed a 3.2% gain.
All sounds quite positive. James, last time we spoke, India was struggling. What's been the situation there?
Yeah, I mentioned last month that India had been going through a particularly nasty wave of the pandemic. And in April, the Indian stock market was one of the very few to actually post a negative return for the month. But there's been a bit of a turnaround in May. The Nifty 50 index, which measures the Indian stock exchange, surged 6.5% during the month, which offers a strong sign that India could experience a similar strong recovery that China saw last year.
Okay, I'll keep eyes on that. Inflation, James, that's a hot topic and one that continues to concern investors. Can you tell us what's happening there and what might happen as we move forward?
Yeah, you're right. Inflation is one of the hot topics at the moment, and the Consumer Price Index in the UK returned to 1.5% for the first time since last March. And in the US, it appears to be the large tech companies which so far have been the most badly affected, as in the last month, Amazon lost 7.1%, shares in Apple were down 5.2%, and Tesla lost nearly 12%. So the S&P 500 index, which is dominated by these big stocks, was one of the more disappointing of the major global indices last month, as it only rose 0.7%. And the Nasdaq Composite Index, which is even more tech-focused, actually lost 1.5% during the month. Now, in the multi-asset funds, we've been gradually reducing our exposure to the S&P 500 index and replacing it with another US index called the Russell 1000 Value Index, which has considerably less exposure to those large tech stocks, which have especially high price multiples at the moment.
And what would be the reasoning behind that?
Well, as I mentioned many times, Leo, we are primarily value investors. So, and the S&P 500 index, about 20 to 21% of that is made up of these 5 huge tech companies which don't exhibit many value characteristics at all. They have large price to earnings ratios in particular. And as I mentioned, they've been particularly badly affected by the inflation fears last month. So we've been looking for more value companies, which is what this Russell 1000 Value Index offers.
Fantastic. James, thank you very much for the update. I'll look forward to catching up with you next month.
Thanks a lot, Leo.
Take care, all the best.